This is Nightly Business Report with Bill Griffith and Sue Herrera.
Building a foundation. One of the nation's top 10 home builders wants to get even bigger and expand its dominance in the industry.
Tech takeover, why Xerox and HP think the future may be better together.
The Real Question. The world's largest marketplace for luxury consignments says that everything it sells is 100% authenticated. But our investigation finds a different reality inside the real. Those stories and more tonight on Nightly Business Report for Wednesday, November 6th.
And we do bid you a good evening, everybody, and welcome. Now, when we talk about deal making, lately we have been referring to trade deals. But not today. Today, it was about good old-fashioned corporate acquisitions across a number of different industries, the kind of activity that can drive the market and change the investing landscape. We start with home building. There was a major merger in that sector, with Taylor Morrison buying William Lyon. And as usually happens, shares of the company being acquired rose, while shares of the company doing the buying fell. And this is a get-together that both companies hope will make the combined firm a power player. Here's Diana Olick.
Scottsdale, Arizona-based Taylor Morrison will buy smaller rival William Lyon Homes, a California-based builder, for more than $800 million in cash and stock. Total value $2.4 billion. That will make it the fifth largest U.S. home builder. The deal expands Taylor Morrison's geographic reach substantially, putting it in Seattle, Portland, Oregon, and Las Vegas. The deal also gives it a much larger footprint in Denver, San Francisco, Austin, LA, and Riverside. It will also expand Taylor Morrison's reach into the entry-level market. Right now, about 28% of its business is entry, but William Lyon's share is 54% of that market.
They have very successfully been able to appeal to the entry level at the right price point in the right locations as compared to just continuing to go further out to the fringe market.
Combined, 36% of Taylor Morrison's business will be entry level, 40% move up, and 13% active adult.
We focused on the entry level, but I'm actually equally excited about their active adult positions and the fact that, we have not been deep in the 55 plus market in the west side of the United States.
And Cheryl Palmer also told me the timing is just right, as Seattle, Portland, and Denver have been going through a reset recently after overheating. Prices have settled since, and buyers are coming back in. For Nightly Business Report, I'm Diana Olick in Washington.
Next up, a takeover that involves two old-school tech companies. There are reports tonight that Xerox is considering making a bid for HP. That deal would combine two household names, both with complicated pasts. And in this case, both stocks rose in today's session. The continued decline of printed paper documents, once a backbone of business, may be pushing two tech icons towards a once unlikely marriage. CNBC is reporting the combined companies could save more than $2 billion in expenses. Most of Xerox's $10 billion in annual revenue comes from renting and maintaining large copiers for businesses, often selling printers at a loss, while banking on purchases of its ink cartridges needed to run the printers. HP, which named Enrique Lores as its new CEO last week, tends to sell smaller printers and printing supplies. It also remains one of the world's largest PC makers. HP's 2018 revenue topped $58 billion. So how can Xerox afford to buy up? The answer is tied to a failed bid to merge with Japan's Fujifilm Holdings. Fuji is dropping a $1 billion suit filed last year when Xerox walked away from the deal. Investors, Carl Icahn among them, resisted, claiming Xerox was undervalued in that deal. Xerox is also expecting to unwind a 57-year-old partnership with Fujifilm, selling stakes worth about $2.3 billion. HP is what remains after Hewlett-Packard split off its server and data storage business, now Hewlett-Packard Enterprise, in 2015. In October, HP announced plans to lay off up to 9,000 people, about 16% of its workforce, aiming to save $1 billion, part of a plan aimed to save $1 billion per year. Companies like HP, Xerox, and Japan's Canon, it seems, are attracting the attention of merger-minded bankers, aware that the digital age is continuing to push past the printed page.
And now to trade and some new figures. According to the Wall Street Journal, the U.S. collected a record $7 billion in tariffs in September. During that month, new duties kicked in on apparel, tools, electronics, and other consumer goods from China. Tariff revenue is reportedly up 9% from August and more than 59% from a year earlier. Those figures are based on an analysis of Commerce Department data.
And again today, Wall Street hung on every headline about the coming trade meeting between President Trump and Chinese President Xi. Today, there was speculation of a possible delay. Kayla Tausche did some digging to see what may really be going on.
The White House is still working to reach a phase one deal with China by November 16th. That's the date Presidents Trump and Xi would have met at the APEC summit before host country Chile canceled the event due to unrest. A senior administration official acknowledges that deadline might not be feasible as the two sides continue negotiating the terms of the deal and a venue to sign it. If the date gets pushed out, the signing summit could move to Europe, where President Trump will be in early December. He's expected to attend the NATO Leaders Summit in London, December 3rd and 4th. Trump, for months, according to officials, has suggested Switzerland as the ultimate neutral location, even as the U.S. pushed China to sign the deal stateside. Reuters has reported Switzerland and Sweden are under discussion, but this official said those are unlikely sites, but perhaps not impossible. The firmest deadline for a deal signing is now viewed as December 15th. That's the date the tariffs on about $160 billion in consumer goods would take effect. For Nightly Business Report, I'm Kayla Tausche in Washington.
And that trade uncertainty stalled stocks today. The major averages were very little unchanged after struggling to move further into record territory. In fact, the Dow fell less than a point today to close at 27,492. NASDAQ was down 24. The S&P climbed by 2 points.
The big economic report today showed that productivity fell for the first time since 2015. The 0.3% decline from the third quarter reflected a cutback in production as the economy slowed towards the end of the summer. Economists say businesses reduced production in response to softer demand, especially for exports.
Now to one of the biggest corporate stories of the year, Boeing and its 737 MAX. The CEO of American Airlines said today he expects the FAA to approve the grounded plane to return to the air in the near future. And CEO Doug Parker said that when the jet is certified, his airline will be ready.
The CEO of Boeing today talked about his decision to forgo his bonus and disclosed that he will give part of that bonus to 737 MAX victims' compensation funds. Speaking at the New York Times Deal Book Conference, Dennis Muhlenberg said the amount would be in the tens of millions of dollars. He told Andrew Ross Sorkin that he came to that decision in part after meeting with the families.
I wish I had gone to visit them earlier. You know, we've been focused ever since the accidents on understanding what happened, doing everything we can to fix the airplane, to improve the MAX. We've been focused on working to make it the safest airplane ever to fly. But the personal element of this and the impact it's had on families, you know, it's reminded me of the importance of the work we do. And we talk a lot at Boeing about the fact that lives depend on what we do, literally. And that should demand this incredible sense of excellence in how we do it. But until it's personal, until you really talk with the families and really hear those personal stories, there's nothing else like that. And that's going to stick with me forever.
As we reported yesterday, Boeing's new chairman said Muhlenberg would not be awarded any bonuses or any equity grants for the year until the 737 MAX is back in the air and flying safely.
Time to take a look now at some of today's upgrades and downgrades. We begin with shares of Lowe's. They were upgraded to outperform from neutral at Credit Suisse, with the analyst citing improving industry trends and the company's current valuation. Price target now $129. That stock rose a fraction today to $112.67. BlackRock was upgraded to buy from hold at Deutsche Bank. The analyst cited the improved macro environment for that company right now. Price target $543. The stock was up 1.5% to $489.54. And Groupon was downgraded to underweight from neutral at JP Morgan. The analyst cited lower online sales and international headwinds. Firm has no price target on the stock, but shares fell more than 2.5% today to $2.92.
Still ahead, what Kohl's is doing to get into the holiday spirit.
I'm Courtney Reagan in New York City at Kohl's Holiday Preview. I'll tell you what the retailer has in store for the season coming up on Nightly Business Report.
The California Attorney General says it has been investigating Facebook for 18 months and says the company is not cooperating. Officials are now asking a court to force Facebook to answer its subpoenas. California is looking into the social media company's privacy practices. The state says the probe began with the Cambridge Analytica scandal, but has since expanded. In a statement, Facebook says it has cooperated extensively with that investigation.
Dunkin' Donuts is hoping to get in on the fake meat craze. Today, it launched a new plant-based breakfast item, the Beyond Sausage Sandwich. And companies that make fake meat are looking to expand beyond the U.S. to China, since that country is one of the largest in the world in meat consumption. Eunice Yoon is in Beijing for us tonight.
CEO Pat Brown is in China for Impossible Foods' debut here, and he told me that he sees China becoming one of the plant-based meat companies' most important markets.
China is the biggest consumer of meat in the world, and the demand for meat in China is so great that China doesn't have the farmland to produce its own meat supply. So it's a huge opportunity, a perfect opportunity for us to have a huge impact on climate change and biodiversity impact of meat, because China is such a big consumer.
On this trip, where he attended the import fair in Shanghai, Brown said he's looking for China-based partners. He said the plan would be to manufacture here and source raw materials locally. He said he's confident the company would be able to maintain its strict quality control standards, and he's not concerned about China's slow approvals for GMOs. As for pricing, Brown said with pork and beef prices rising, his plant-based meat would be competitive. The company is serving up 50,000 samples of plant-based burgers and dumplings at the fair. One unique aspect of the China market, China has a thriving fake meat dining culture because of its 250 million Buddhists. You can get plant-based Peking duck, for example. Brown said his target consumer is different because they're not necessarily vegetarians, but want a meat-eating experience. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Chicken nuggets spice up Wendy's earnings, and that's where we begin tonight's market focus. The fast food chain topped expectations, helped by strong demand for its spicy chicken nuggets and other special menu items. Wendy's is also raising its full-year outlook as it plans to launch its breakfast menu next year. Shares were off a fraction to $20.77. CVS topped analysts' expectations, driven by strong numbers from its pharmacy benefit management unit and its Aetna health insurance business. The company also raised its guidance. Separately, the company is shuttering 22 stores next year. CVS rose more than 5% today to $70.93. Strong growth in its Medicare Advantage health unit helped Humana's results beat expectations. The health insurer also lifted its outlook and expects to match analyst profit targets for the next year. Humana shares were up nearly 3.5% to $304.94. The New York Times saw growth in its online subscriptions, but the publisher says it expects challenges coming for its digital advertising platform.
We guided to a potentially challenging fourth quarter for digital advertising. There are particular reasons for that. We did fantastically well a year ago. Digital advertising went up 30% a year ago. That's a pretty tough comp. One or two very, very big deals are not going to repeat in the fourth quarter. We've done the deals. We've done very similar big deals. They won't appear till 2020.
Shares slid nearly 4% to $30.69.
Tiffany is reportedly asking for a higher price from suitor LVMH. Reuters says that Tiffany's board felt that the $14.5 billion bid was not enough, and it's willing to open its books and provide confidential information to the French luxury company to prove that it deserves a higher bid. Tiffany's shares rose a fraction to $124.69. After the bell tonight, Qualcomm reported better than expected results, with the CEO saying the company's technology and inventions leaves it well positioned as the rollout of 5G accelerates next year. Shares initially rose, and after hours trading, they closed the regular session down a fraction at $84.63. Also after the bell, Roku topped Wall Street's revenue estimates, but reported a bigger net loss due to higher costs in its video streaming unit. But the company did see an increase in active accounts and average revenue per user. Shares initially dropped, and after hours trading, they closed the regular session up about 1% to $141.05.
The most important time of the year for retailers is just around the corner, and Kohl's, which got an early start on its holiday planning, is stepping it up a notch. Courtney Reagan is in New York City tonight.
Department stores have struggled to excite shoppers in recent years as mall traffic has fallen, Amazon has grown, and consumers turn to the brands directly. Competitors like Macy's, JCPenney, and Sears have closed a lot of stores, but Kohl's has leaned into its stores, the vast majority of which are not in the mall, even offering an Amazon return service to drive shoppers inside. CEO Michelle Goss said the retailer is excited about the traffic Amazon Returns is driving, including new customers, and that the expectation is that it will be, quote, economically accretive. Still, Kohl's knows it has to offer consumers a reason to buy after dropping off an Amazon return. So the department store is focusing on newness, the key word she and other executives used to describe the holiday strategy and beyond.
This is Kohl's 4-day pop-up in New York City. It's meant to introduce shoppers to new brands or refreshed products. It's also intended to resemble New York City holiday windows.
For consumers outside of New York City, Kohl's created this augmented reality Snapchat experience, a virtual, social replication of the holiday window pop-up. Goss said Kohl's is leaning into more opportunities for social moments. The New York City pop-up is a good example of that part of the marketing strategy, hoping to leverage Manhattan's influencer community and consumers less familiar with Kohl's, since the closest store is across the river in New Jersey. While total sales disappointed in the most recent quarter, Kohl's home department sales underperformed the rest of the store. The retailer is hoping its new Scott Living private brand by Property Brothers Drew and Jonathan Scott will get shoppers spending. It's the largest multi-category home launch the retailer has ever done.
Kohl's has been more aggressive than its competitors with its holiday strategy. It started seasonal hiring in July, and it's out first with its 64-page Black Friday ad.
Daily deals for the first time and free photos with Santa as the retailer urges gift givers to get started. There's 6 fewer days between Thanksgiving and Christmas this year. For Nightly Business Report, I'm Courtney Reagan in New York City.
Coming up, The RealReal, the world's largest marketplace for luxury consignment, says everything it sells is 100% authenticated by a team of experts. But an investigation finds a different reality inside the company.
Turnover in the C-suite was the highest on record in October. According to the outplacement firm Challenger Gray & Christmas, there were 172 CEOs who left last month. That's up from 151 in September. Challenger tracks changes at companies that have been in business for at least 2 years and have at least 10 employees.
Shares of The RealReal fell for a second straight day today. The stock closed down more than 7% for a 2-day decline of about 18%. As you may know, The RealReal is the world's largest marketplace for luxury consignment goods, and it recently went public, raising hundreds of millions of dollars. Company's been growing quickly, but is it sacrificing quality for profits? And why are some employees sharing a different reality? Andrea Day has our investigation, The Real Question.
Our goal is to deliver a tremendous value for our new investors.
She's the founder and CEO of The RealReal, reselling luxury goods like pre-owned Birkin bags and Cartier watches. Julie Wainwright's 8-year-old company went public in June.
The total opportunity in the U.S. is $200 billion.
Most of the business is online, with 3 retail stores to date.
Well, now we're just like, how big can we get?
And growth has been rapid. Merchandise volume up 48%. Revenue up 52% in the first 9 months of the year. Still, company financials show it's not profitable.
Everything is authenticated.
The Real Real's promise?
Authenticated by our experts.
With an expert behind every item, we ensure everything we sell is 100% real. 100% authentic.
There's no fakes on our site.
That message is key to the Real Real's appeal and has helped drive growth. But has it grown so fast it can't deliver on its 100% promise?
So we are going to the Galerie Lafayette opening.
Just ask this celebrity designer. She recently called out the company on Instagram for selling a fake version of her shoe.
What's up, you guys?
And hundreds of fired up customers, like this one, posting on YouTube.
It looks like this was scratched by a cat.
After speaking with nearly 3 dozen former employees and obtaining these internal company documents, our investigation uncovered a different reality inside the Real Real.
Did you actually see fakes make their way onto the site for sale?
Yeah.
Shanice Parchment was a copywriter for nearly 3.5 years at the Real Real's warehouse in Secaucus, New Jersey, but says the team she managed did more than just write about designer goods. They authenticated them too.
Do you think they had enough training to authenticate these luxury bags?
No, I don't think anyone had enough training to authenticate anything.
And the Real Real's, quote, expert behind every item?
Only some items.
That's been happening since I began at the Real Real.
Greta Stair worked as a luxury manager for the Real Real in Los Angeles, spending most days with consigners, but says a 2015 company tour of the warehouse in New Jersey left her questioning the business.
Most pieces were being handled by the copywriters, and only very, very high value items, it seemed, were being authenticated by the actual lead authenticators. It was very surprising because I was under the impression, even as an employee, that every item was authenticated by an expert.
Hello. I'm Graham Wetzbarger.
Graham Wetzbarger has been the chief authenticator and very public face of the Real Real.
This is truly amazing.
But what exactly did his team authenticate? CNBC obtained this internal chart from 2018 sent out to copywriters, spelling out what was to be processed by the authentication team and what copywriters were to handle. Based on this, anything Chanel went to the authentication team, but Fendi bags, no. Prada bags, only leather. And Gucci belts and shoes, both no's. According to a 2015 World Customs Organization report, some of the most counterfeited brands in the world include Chanel and Gucci.
Some people don't even know the difference between real leather and fake leather. So how are they going to authenticate an item?
Top authenticators are trained to spot tiny details in designer bags, like the number of stitches per panel in Chanel's iconic quilting pattern. Chanel is suing the Real Real, claiming the company sold counterfeit bags on the site. The Real Real says the suit amounts to harassing with meritless litigation, and the case is pending. According to Parchment, when fakes and mistakes were discovered on the site, they were added to a list to be corrected.
How many of these corrections were happening every day?
Too many to count.
Did mistakes happen?
Absolutely. Yeah, all the time.
Emily Bobb worked as a copywriter at the Secaucus warehouse for more than a year and says she was also tasked with authentication.
And I sort of had an idea of how to authenticate a handbag. So I would go in and I would do it myself, praying that it was authentic.
Do you think you had enough training to know what's real and what's fake in every category?
I wouldn't say I had enough because I obviously had some bags that I published on the site that were fake. Trying to figure out if a bag is real or not is not, the top of your priority.
So what is the real priority?
It was just get as much out as you can.
This internal document lists a specific daily quota for 2018 and 19, saying copywriters are expected to consistently reach their daily quota, and copywriters are subject to disciplinary actions.
The way that we were expected to work was like a machine. From Julie herself, that we had to get in these numbers by the end of every month in order to please the investors.
Stair says she left after 3 years to work for a competitor. The RealReal sued her for taking its clients, which she denies. The suit was eventually settled. We sifted through close to 1,400 reviews of the RealReal online and in public records. The top 3 complaints include fakes, damage, and customer service.
Everything we carry is real, is so important to us that we put it in our name.
But this big name is now gone. Chief Authenticator Graham Wetzbarger.
With the Velcro, love that.
He tells CNBC, "I won't discuss why I left the company." When asked about his departure after nearly 7 years, he denies it was related to our story. And when it comes to copywriters authenticating items, Wetzbarger would not comment. The company declined our repeated requests to go on camera, instead sending this statement saying in part, "We stand behind our authentication process and will always work with our customers to make things right. And if there is a question about the authenticity of an item purchased from the RealReal, we refund the purchase price upon return." The company refused to provide any more details, only saying that this is our final statement. For Nightly Business Report, I'm Andrea Day.
And on Monday, during the company's earnings call, the CEO said for the first time that copywriters do take part in the authentication process, and only the so-called high-risk items go to the experts. It's what we've been asking the company about for months, but got no response.
And that is Nightly Business Report for tonight. I'm Sue Herrera.
I'm Bill Griffith. Have a great evening. See you tomorrow.